Gearing up for the real world can be completely overwhelming, and according to our next guest, many millennials don't possess the financial knowledge to help them through the financial hurdles they face right after college. Well, joining me is millennial financial expert and author of Broke Millennial, Erin Lowry. Erin, good morning to you.
Good morning, Alex. Thanks for having me.
Great to have you on. So let's talk about the real burden that millennials are facing with their student loan debt.
Absolutely. Well, unfortunately, the millennial generation has a huge amount of student loan debt, with the average grad in 2016 graduated college with $34,000 in student loan debt. Now, obviously, that's a lot to handle, but it's also a really big mental burden, with 40% of people saying, according to a recent SoFi survey, that they would stay at a job they hated because of their student loan debt. Now, interestingly enough, millennials are always teased about being attached to our cell phones, but 75% of millennials would be willing to give up social media for an entire year if it meant getting rid of their student loan debt, while 50% admit to experiencing anxiety or depression when it comes to their debt.
Yeah, I mean, if they're willing to give up social media, sign that's really affecting them badly. And so let's talk about some strategies that millennials can use to sort of tackle this debt.
Absolutely. The first thing that you have to do is face those numbers, and that's often the most overwhelming part of this process. But you need to look up exactly who has your loans, who your servicers are, what the debt is, and what the interest rates are. And once you get that information, that's when you can move on to formulating an actual plan to tackle the debt. Now, for some people, federal options are great, whether that's an income-driven repayment plan or even looking into a forgiveness program. But for others, refinancing is certainly the way to go. And for some people, it's actually a little bit of both.
Right. So let's talk about, I mean, aside from saving money, of course, what's the importance of refinancing as soon as you get out of college?
Well, saving money is certainly a big factor. You know, recent college graduates are just hitting the end of their grace periods now. We're 6 months out from graduation, so it's time to start paying off those student loan debts. And when you refinance, you often are moving to a lower interest rate, which the average SoFi member saves about $300 per month and over $22,000 over the life of the loan. So it's a really great way to save some money. But in addition, it can really simplify your repayment, because a lot of people have various, loans at all sorts of different lenders. They could be making 10 different payments a month, but with refinancing, you're consolidating into one easy, simple monthly payment.
Right. Even something like refinancing will just make it a whole lot simpler. Like you say, you're going to save a whole lot of money. It's the long-term plan that you really should be looking at. So, Erin, before I let you go, we have maybe about a minute left. Any other tips you want to leave us with?
Well, absolutely. Whether you're a recent graduate or not, knowing your cash flow, aka budgeting, is incredibly important. You got to have that information in order to make informed decisions. But the other thing is, consider more than just your student loan debt. Start focusing on those short, medium, and long-term financial goals. Start thinking about retirement. Look to see if you have a 401k option at work, and definitely start automating your savings. Start building that habit early. Even if you can't save a whole lot now, just building that habit is incredibly important.
Right. Every little bit counts. Well, Erin, thank you so much for these very important tips.
Thanks for having me.
Of course. Stay right where you are. We'll be right back.